For years, Binance.US built its entire foundation on one simple concept: facilitating the basic buying and selling of digital assets. But the domestic cryptocurrency landscape has matured. Basic spot trading has become a low-margin commodity, and it is no longer enough to maintain a competitive advantage. The platform also carries the weight of its own history. After years of intense legal scrutiny, the exchange is now forced to rebuild its operations while attempting to restore customer trust. Relying on this singular, increasingly crowded business model leads toward market irrelevance in an era of sophisticated financial services. As spot trading volumes across the industry stagnate, the exchange is looking toward high-margin products like perpetual contracts and event-based speculation to secure its future revenue. Crypto platforms cannot simply deploy new code to launch these services. In the United States, these specific financial products are strictly partitioned by federal law. This creates a structural bottleneck. Growth is no longer a matter of technological innovation. It requires obtaining explicit legal permission from the federal government. The company's trajectory now depends on transforming government regulation from a restrictive barrier into a tool for market expansion. This strategic shift was made public during the Rare Evo conference, where CEO Stephen Gregory outlined the company's next steps. The exchange plans to formally apply for a Commodity Futures Trading Commission designated contract market license next month. A DCM license provides the legal framework to trade derivatives in the U.S. Securing this requires the platform to subject its matching engines to rigorous CFTC oversight. By meeting these standards, the exchange gains authority to offer highly regulated financial instruments. This license reclassifies the exchange's legal status, expanding the scope of what it can provide to American investors. The primary objective of this regulatory push is the launch of regulated prediction markets. In a prediction market, traders don't bet on token prices. Instead, they speculate on binary outcomes of real-world events. This includes positions on political elections, economic reports, or major sporting events. Beyond event betting, the CFTC application clears the way for perpetual contracts and allows the exchange to lower trading fees to undercut its domestic rivals. This new product suite allows Binance.US to move from a defensive position into direct competition with the largest regulated entities in the country. Filing the application is only the first step. Approval from the CFTC is a complex process and is never a certainty. The agency conducts a case-by-case review, evaluating each platform based on the technical and financial complexities of their specific proposal. Because of these rigid timelines, there is currently no guaranteed launch date for any of the exchange's new product pipeline. The platform's expansion plans are currently suspended, waiting on the specific pacing of federal bureaucratic review. If approved, the move will trigger an escalation of competition within the rapidly growing U.S. prediction market sector. Binance.US would be entering an active arms race, joining a field of platforms already contending for dominance in this niche market. This corporate pivot mirrors a larger shift happening across the entire cryptocurrency industry. The era of unregulated offshore trading is being replaced by a landscape defined by domestic compliance and federal integration. To survive, exchanges must move past simple spot trading and master the regulatory machine to become fully regulated digital asset marketplaces.